Hello everyone, and welcome to today's session on scaling globally, succeeding locally, a conversation with Worldpay for platforms. And I'm joined by none other than Grant Evans. Grant, it's a pleasure to have you on. I personally always enjoy the thought leadership and the content that you very generously create and share. And I'm sure you're a very familiar face. For those that might not know who you are, could you introduce yourself?
Yeah, thanks for having me, Shona. Glad to be joining you today. So I'm currently Vice President of Sales and Partnerships for Worldpay for Platforms here in the UK. Worldpay for Platforms that don't know us. For those who don't know us, we are essentially the embedded payments division of Worldpay. So I describe that as B2B2B, if you like. We don't really tend to deal with end merchants in the market, but the platform providers that service those merchants.
Brilliant. It's great to have you on. And I'm Shona. I'm a senior manager here at KAE. And for the last decade or so, I've been advising payment companies on growth and expansion using customer, market, and competitive insights. So for today's session, I will be discussing sort of the ingredients of what it takes to make international expansion a success, with some great insights from Grant and the Worldpay for Platforms team. The session is being recorded, so it will be available on demand to watch after. And do feel free to jump in and put your questions in the Q&A box, and we'll do our best to answer them at the end of the session. All right, Grant, let's get started then. I imagine those tuning in today are potentially either themselves responsible or partially responsible for taking their business or their proposition international. So let's make the first question about them. What do you think they could be feeling or thinking as they look down the barrel of expansion and the sort of journey that they're setting out on?
Yeah, it's a really good question. I think the way I would probably position it is that they'll have done a significant amount of research, no doubt, about the next market that they're looking to move into. And that brings in various different things, from regulatory complexity that they might have had to look into. We talked previously in the run up to this around some of the language challenges that you can potentially face when you're moving into a new market that's not your own. They'll probably have got to a point when they've got really strong home market performance if they're only in one particular market at the moment. Obviously, at Worldpay, we operate at a global scale already, and I think we're maybe a little bit more strategic around the geo expansions that we do, particularly obviously with platforms. We've been around for over a decade in different markets, but there was really a timing decision that was made about coming to the UK a few months ago, which is the part of the business that I'm responsible for from a commercial point of view. Yeah, and you want to have a scalable infrastructure as well in place within that market. That's a really important one for me. You need a commitment from your leadership team that it's not something that's a tick box exercise. It's really something that's going to have ongoing investment and support to help you to scale appropriately as well.
Absolutely. And I think that commitment from leadership is such a salient point. So when we've worked on these types of expansion projects, you can tell very early on how successful it's going to be by who's in the room. Do you have the buy-in from the commercial leaders, from the product team, from marketing, etc.? So it's a really cross-functional collaboration. Absolutely. And then taking a step back, then what kind of is the world that they're living in, these payment companies, as they're expanding internationally, in terms of the challenges in the market or the headwinds they might be facing when going international?
Yeah, I think there's definitely fragmentation in payments, and I think that is a real bugbear for particularly merchants that use payment products, for platforms that consume them and embed them in their proposition. There's a constant narrative around, why can't we just have one single payment provider that can do it all for us? And that's really poignant when you're looking at geo expansions with ourselves. Our core markets before coming to the UK and also Canada, where we've rolled out this year. So we have Australia and New Zealand and the US as our main established markets. And it's been interesting, some of the partners of ours in those markets that are now coming on a journey with us in the UK or in Canada, because they were almost waiting for Worldpay to be rolling out into those regions. And that's been really interesting. I think it also shows that they understand we have a really solid and diverse payment stack, and by continuing to expand with us and trust us with their either new market entries or moving across from someone else to Worldpay for platforms, knowing how well we service them in other markets has been interesting. I think part of that comes back to that fragmentation. We have unified APIs that allow a singular integration across various different markets, and then that comes with unified reporting across those markets, across different payment methods. In the UK, we have cards and we have direct debit on the unified reporting tool. And when we roll out point of sale, we'll also pull point of sale data in alongside e-commerce transactional data. Sounds like little things, but the amount of businesses that you can encounter that still log into various different reporting tools and portals, and they run various different API integrations for different payment methods is crazy to me in 2025, but we do encounter that all the time still.
Yeah, and I suppose if you don't have the scope of Worldpay for platforms, as you suggested, actually knowing where you fit into the value chain or the systems or the workflows that local customers in that market are using, I guess unpicking that can be quite challenging.
We're quite fortunate in the sense that we have really strong brand recognition as well. So there aren't really many markets that you go to where Worldpay's either a completely unknown brand or not a leading brand potentially as well, in maybe not in the market we're not already in, but the UK is a unique one because Worldpay is a massively established brand here. Worldpay for platforms is a sub product set within Worldpay, but the established brand that we have here obviously helps us to rescale conversations and discussions for pay for platforms faster than maybe a small startup might potentially find. So, you know, those smaller providers in a really competitive market probably need to be thinking a little bit more outside the box when they are doing their own geo expansions, as to competitive research and analysis, understanding what they're up against, and then how they get their product market fit or marketing fit right is really important, like how you bring that product to market. And we spent a lot of time again with our geo expansion working out what our message was going to be around coming into the UK for one, but also like why pay for platforms for embedded payment solutions for those providers that will embed our services in the UK market. And I think the challenging thing for us is it is an established market. There's a huge amount of ISVs, integrated software providers in this market, and we'll have to unpick some existing payment providers as we scale here from the existing setup that they've already got. And that is challenging because you're basically asking people to free up their product roadmap and put a new payment provider integration on there. So we really had to get our messaging right. We're going to be in those swap out conversations as well.
So right messaging, right product fit, and as you said, brand awareness, and especially for those smaller payment companies that might be expanding. I know from research we've done that sort of brand credibility, brand awareness piece is super important. That sort of social proofing that you're a company that can be trusted with something as precious as payments, for sure. Okay then. So how do you tell when market expansion isn't the right next step in your journey? Do you feel like there's any kind of tick box or any red flags where companies should really be looking at doubling down more on their home markets or their existing markets than making the journey in the first place?
It's a really difficult question. Again, for a massive global player like us, we're probably always looking at the next market because we want to solve that problem that I talked about around not having to have any large global operator feel like they're having to plug in multiple payment providers to plug gaps in certain countries or regions. If you're a smaller operator, you have to look at things like the cost of moving into new markets, because I think things like having team members ideally on the ground. Again, we're very fortunate at Worldpay that we have a lot of boots on the ground in a lot of regions, whether that's physical offices or individuals based in country that speak the language. That's a massively important one for me. I think if we take this next step into European markets, potentially in the future, other locations, we're not doing that anytime soon, but they're the sort of things I would be looking at around the different languages that we need. And I'm not saying you have to have someone on the ground there. It is a nice to have, but if I was moving into France, I'd probably want French speaking partner success managers in my team that can speak the language, that know the local market potentially. And I think that is a really important one. But there's cost involved with all this sort of stuff. And I think that the smaller providers out there have to be at a point from a revenue growth investment cycle point that they're getting their timing absolutely right.
Yeah, absolutely. Because like you say,
that you talked about, getting the story right as well. If they are then taking that risk, as it might be for a smaller provider to move into a new market, then they really need to do their competitor analysis and understand who they're going up against to try and win market share in that region.
Yeah, absolutely. And I guess the other one, big one as well, is what are the drivers of adoption in different markets, right? So what is it, not just what are the needs, but of what are you serving, but what elements of your proposition are actually going to have the biggest impact on conversion rates or other metrics that you might be looking at to make that investment worthwhile. Absolutely. All right then. Were there any kind of warning signs though that you think, okay, this company's just not ready to take it international just yet?
I think you have to do robust due diligence, and I think we would do that even when we're working with new partners at Worldpay. We look at the due diligence side of things of a partner as stringently as we would with a merchant. We're regulated businesses or business units, and that is really important. There's a lot of partners that will say they're going to deliver the world, and actually they end up not following through with that. And I often, even in previous roles that I've had, most people that have worked in partnerships have been stung with that in the past, where they've partnered with someone and it does lead to partnerships getting a bad reputation because we always do the big PR pieces and the big announcements around partnerships. And it's the payments industry is maybe one of the worst offenders for this, in terms of every week, obviously in my news that I talk about all these partnerships that are taking place. But what actually, when you lift the hood up, is that partnership really delivering? And that due diligence piece is the one that's always front and center for me. And you need probably a launch partner in market. I think just coming to market, or you need someone that's going to come on that journey with you. And again, we've been fortunate because we have other platforms in other regions that were either waiting for us to launch in the UK or had a very strong interest in coming on a journey with us here. And I'd say that applies to any geo expansion, or you want to have an existing collaboration or early adopter that's going to come on a journey with you in that market as well.
Yeah, and can actually deliver. So it's not just a press release that gets put out there, but can really follow through on what they say they can do.
Yeah, or maybe save the PR for once until the integration's finished. You've got customers, and you can actually talk about tangible success stories with live volume. And that's not just a payments thing. I mean, that's any industry out there, right? Wait until you've actually got what I call a true case study.
Yeah, absolutely. And tell the story of the case study, not the blinging PR press release. Cool. All right. I want to talk now about Worldpay for platforms. The research shows that there is a demand and a growing demand for embedded payments amongst B2B SaaS and platforms. But what about unmet needs or unaddressed pain points? When Worldpay for Platform was looking at international expansion, what did you feel your target customers were potentially lacking that made the case for you expanding into new regions and differentiating on?
I think with the UK market, the big one for us was being able to offer cards and direct debit on a single API and with a single reporting tool. That's direct debit maybe doesn't get the spotlight that it should have as a payment method in the UK, but we know that 7 in 10 payments still get processed via direct debit. It still grows as a payment method month on month, so it's not in decline as far as volume processing is concerned. Yes, we also do recurring card payments, and some businesses will go down that road. Some will offer both recurring card payments and direct debit. But generally speaking, with our competitors, they've needed to use third parties or do separate APIs, separate reporting tools for direct debit. And that can just be, another bugbear, I think, for recurring payment businesses. And there's a huge subscription economy in the UK, and it's very vast and wide in terms of the actual, what we would call ICP, the ICP profiles of different sectors that we would target or work in. Globally, we're very strong in gym SaaS, in health and beauty, in financial services, in education. I think, again, you think subscription economy and people go retail, and that's the thing that gets in your head, or maybe utilities and stuff like that. But actually, direct debits and recurring card payments can pretty much sit in every single vertical you can imagine now, which is really exciting for us because it means the opportunity to expand our ICP over time is very prevalent. And that's not just in the UK market. And there's maybe more legacy sectors. Again, we were talking earlier about salons and barbershops. There's platforms that service barbershops now to make your hair booking really easy, but there might be 2,000 barbers that sit on one or two SaaS platforms. So that becomes really exciting opportunities for Worldpay as well, because if we can sign one SaaS platform as a partner, but underlying that there's 1,000 end customers. There's our target customer base, right, through one partnership or one integration potentially. And then the big thing that comes to mind from that point is speed. And speed is front of mind whenever most people, certainly from a consumer point of view with payments, payments is something that should just work, and it should work quickly, and you shouldn't have to think about it. If you have to think about payments, and by that nowadays that is putting your card number in, or even your address right in posted checkouts, is very easy, and the world of payments is seamless, and it's just expected to work. And if you hit a single point of friction now, kill your appetite to actually want to go and re-spend with a business. And that can be, again, in any sector. It's not just that retail experience. If I have a bad booking experience booking a haircut for a salon app because the payment form was rubbish, or it didn't sync up with the barber and I turned up and they didn't have the booking, like, again, that just warps my mind. I'm not sure I want to use that platform again. So we're quite dependable as far as platforms are concerned, because if they have customers experience friction with their payments and we're the root cause of that, then obviously that affects other businesses further down the line. So it's quite interesting from that point of view with platforms.
Yeah, absolutely. And going back to that idea of a single API that you mentioned as well, what was that friction point mean to platforms? What was the impact that was having that you felt like you wanted to solve it?
It's a maintenance thing as much as anything, because you're having to maintain different APIs for different payment methods, and to be able to remove that pain point for a platform is certainly very beneficial. But a lot of these platforms will not use off-the-shelf reporting tools, so they'll use our API to maybe build their own in their own CRM or their own platform. So you need to be able to give them the functionality to do that easily and conveniently. And I think by having all of the payment methods that we know those platforms need on a single API, that's a lot easier than their developer team having to go and review this API for card payments, this API for direct debits, having to maybe build their own recurring scheduler out rather than possibly using one off the shelf from ourselves. Yeah, that's definitely been something we've encountered already early days. We've had platforms that have quite openly said that they had two separate integrations and two onboarding journeys as well in many cases. So end customers having to sign up once for card and then sign up separately for direct debit. That's not a good experience for the customers actually signing up with these platforms as well. So it also removes that pain point from the end customer journey.
Yeah, absolutely. And I think you mentioned something really interesting earlier about the actual end customer experience. So the consumers that are using the services that the merchants on the platform are providing to them. So could you talk a little bit from a kind of loyalty perspective as well, or a customer experience perspective? What do you set out to solve?
Loyalty in what regard do you mean?
Loyalty
Sorry.
in the sense of having a rubbish payment experience and bleed through to the rest of the experience of delivering that service and the impact that can have for the end merchants and their customers.
Yeah, I think that there is a loyalty angle. I think Shopify is probably the best example of that, whereby they've created their poster child for embedded payments, right? Payments probably wasn't their core product when Shopify launched as a business to help retailers, but they consume payments now. They offer it as a product within their own stack, and you have Shopify payments. And interestingly, even for myself, when I'm buying on a retail site now, you just immediately know it's a Shopify site, right? They've visually created something that you know and trust, and you don't really have, if you've shopped across multiple Shopify shop fronts, you probably don't have to put your address details in again. You know you're going to have digital wallets there. That is just must have now. Apple Pay, Google Pay, one-click checkout. That is the kind of speed that we talk about being just expected by consumers now. But also, you don't generally want to be redirected away from a website when you can avoid it. So that used to be an experience that we had in payments quite a lot, where you get to the payment page and it would say, we're redirecting you now to ABC, card acquire, whatever it might be. You make your payment and then it bounces you back. Like now, if that happens, you might even lose a customer because they're like, I'm not used to this anymore. I'm used to getting to this page. It knows my address. It knows I can just choose the payment method, click a button, look at my phone, whatever it might be. And that's on desktop as well. And someone said to me the other day, you can't use a wallet on my desktop. Well, you can, as long as you're using the right browser for the right payment method that you've got. You really shouldn't very often be having to enter in a full card number these days. And card numbers might not even exist in a few years as a result. So yeah, we're at an interesting point in time where everything needs to have great UX and UI. It has to be quick, and it has to just be something that an end consumer doesn't have to think about.
Yeah, absolutely. And just because I love the topic of embedded payments, I promise I'll get back onto international expansion. But I guess the other kind of last question on this as well is, to what extent did you see an opportunity to help platforms like monetize payments or earn additional sources of revenue? Was that something that you looked at and thought you can help with?
Yeah, it's probably one of the core value adds that we have, and I think that platforms have been monetizing payments in some cases that we've come across, but they've been doing it as an additional fee. So they're not only saying to their end customers, hey, you have your payments fee from this payments provider we use, but we also charge you another fee on top of that for the convenience of the fact that we had to integrate that payment provider and you are now benefiting from our connection. A model slightly different, that they consume some sort of revenue contribution in a headline rate, so the end customer doesn't feel like they're getting hit with two separate charges from their platform. And you get the argument of why should they be monetizing that? The end customer can go and just get their own payment solution anyway. And my argument to that has always been they can, but they're going to pay a developer to integrate it. They might have to maintain that payment integration. If new payment methods come, they'll have to, unless they have a really good in-house resource, they'll have to go and get a developer again and say, oh, we want Klarna now, we want this payment method now, we want this payment method. By using an embedded payment solution from your SaaS platform provider, it's something that they will have to constantly maintain and update in order to stay at the sort of pointy edge of innovation within their own competitive market. And parking platform providers is a good one with that. I've got about 6 different parking apps on my phone from when I'm going around the country and events and whatever it might be. And
Need someone solve it. This is the bugbear of people up and down the nation.
It's still better than having 700 different council apps on your phone, but they have consolidated in that sense. But the user experience on these parking apps is so variable, and then the payments element of that is very variable as well, I have found. So that's been quite an interesting market. But I know those parking apps, as an example, they're surely going to be charging the local council probably some sort of fee for the payment element of their product, you would imagine. And I think that's money well spent for a council, because they're not having to go and do it themselves. They know that people parking can quickly tap Apple Pay, Google Pay, and done, and I have to think about my parking. I'll get my reminder and I'll just extend it, whatever it might be. This council's probably a good example where they go massively into that procurement process, and things always take a long time. Payment is another part of that would impact councils. So they can do procurement on SaaS platforms instead, and not have to go to market every 2, 3, 4 years and go through that really long cycle that councils go through, because they're just trusting a SaaS provider to take care of that side of things for them. And that's a good idea, a good area of embedded payments that's servicing probably a more legacy sector quite well at the moment.
Yeah, absolutely. Okay, so it sounds like that kind of as you were looking at international expansion as well, pay for platforms, sort of you had quite a defined sense of kind of what you were solving for, some of the sort of areas that you could add benefit and value. Taking it back to the sort of like the homework element in terms of doing your homework before you set out on the journey, as you said, was very important. What kind of insights on competitors or markets or customers did you find particularly powerful in prioritizing your investments or prioritizing your decision making?
I think with the UK and Europe as a wider overarching, probably look at the two at the same time, even though we chose the UK and Canada's gone on at the same time. But the UK is and Europe as well is a very interesting market, because the sheer volume of ISVs that we have, around 16,000 ISVs across the UK and Europe, and only a very small fraction of those operate as true payment facilitators, where they take full control of the payment journey and underwriting and risk. So embedded payments is a step removed from that, where we still own the end customer and contract the end customer, but we give our platform providers a certain amount of freedom to host or co-host an onboarding journey. And that comes back to the speed conversation again. But to your question, I think the potential for scalability is very clear in both the UK and Europe, because it's a mature market, but also because could we have come here a few years before? Potentially, but actually now the market's at a point in the UK where platforms, I think, know exactly what they want from a payments provider, and that's been our experience in the first few months of expansion, that we're having conversations where we're not having to overly educate platforms, but they're bringing pain points and bugbears and ideas as well, which is really exciting. As a newer entrant to the market, we have a little bit more flexibility around how we can potentially work in collaboration with some of these platforms to bring something new and exciting to the market. And that's opportunity for us that maybe some of our competitors will struggle with because they're servicing more customers at the moment than we obviously will be as a newer entrant. But yeah, it gives us a really strong go-to-market strategy. And we know that in pretty much every sector, there's SaaS providers that have either embedded payments already or they're looking at it as something that they seriously want to do.
So it's about finding that sweet spot then where you have a large enough TAM, you have scope for scalability, you have an audience that is already educated to an extent, but the market isn't so mature that you've missed the boat and it's saturated from a competitive perspective. Is that kind of the sweet spot you're describing?
We probably assess over Samsung quite a lot, right, in terms of the addressable market that we're looking at and the ICPs that we focus on around that. I think it would be naive of us not to look at the ICPs where we've performed really strongly in our established markets and learn from the successes that we've had in those regions. And that's why we have a great alignment with our team in Australia and New Zealand, work a lot with my US colleagues as well on where they've seen success, where they've seen challenges. We have 10 plus year experience and learnings that we can take very fortunately from our colleagues in other regions with the same product that we have. So that internal collaboration is just as important as the external collaboration that we have with our end partners.
Yeah, I love that, creating that feedback loop as a kind of multinational team on lessons learned and pivoting as needed.
100%. And I spent time at our offsite in Australia earlier in the year, and we had two partners that stand up and just spoke so highly around the relationship management and support that they get from the team out there at Worldpay. And that was just the passion that they had was really good for me to see as a newer employee into the business as well. And we're going out to our partner forum in Colorado and spending time with the team in the US as well, and Money 2020 over in Las Vegas, where there'll be Worldpay for Platforms partners. And just seeing how they interact with the team is really interesting for me, and how we kind of service that relationship management side of things. Our partner success manager team is really pivotal part of the platform's business, which it's all good. And like I said before, signing those partners and winning those contracts is, of course, fundamental to what we do. But how then we keep those customers and we scale with them and turn them into long-standing Worldpay customers, that is massively linked to our partner success managers and how strong they are in market as well.
And not only customers, but advocates as well, by the sound of it.
Yeah, definitely. I was even said to the team in Australia, like, I never heard partners go to those things, but actually the passion with which those partners spoke was really good to see.
Brilliant. Absolutely. And this is a lovely segue, as we've talked a little bit about local partnerships and integrations and the important role that they play with geographical international expansion. So could we just talk generally, I guess, at first, in terms of, from an expansion perspective, how do you approach identifying and establishing the right partnerships and integrations in a way that's going to reduce risk and accelerate your growth in that market?
It's a bit of an open-ended question, I think, in the
On
sense.
purpose.
Yeah, look, investing in that deep market research, like I talked about before, is really important. Understanding the local regulations that you're going to face in market. Customer preferences can be really variable again in different markets. So understanding what those customer preferences might be. And an example of that, again, in Australia, they have EFTPOS for point of sale, which is a local payment rail out there. They have Pay2 as a newer payment method. You know, that their open banking framework is a lot further on than the UK in some ways, in terms of the amount of local banks that are signed up and onboarded for that. So there's just expectation in those sorts of markets that you can support the local payment rails. And I think that's probably for us one where, you know, Europe will bring future challenges as and when we should maybe decide to go there, because you've got a hell of a lot of local payment methods throughout Europe. Card isn't king in a lot of countries there. So you really need to do your research around what payment methods those customers expect to pay with, first and foremost. I think the UK is a fairly easy market in that sense, because we are still a very card heavy market, but digital wallets is a must-have, like I said before. But things like pay by bank have been a little bit slower as far as adoption rates are concerned, but then not so in financial services, maybe, where we've got better adoption. So you think about the ICPs that we have, we can go, yes, cards and direct debit and digital wallets are great for that segment, but actually you scale maybe into something like financial services and you think actually there's quite a few lenders that are actually utilizing pay by bank now, and that might be a gap for you in your product stack potentially if you don't have that. So that's where the ICP research as a further sort of deep dive is really important, because you can have your TAM and you can have your ICPs segmented out, and then you really need to understand the actual specific payment nuances that exist within those ICP verticals that you have. So it's all good and well having a TAM list, and I love a TAM list, but probably getting that TAM list in front of your head of product and your actual product team and aligning it with your own roadmap is then the next evolution of that, and making sure, again, going back to that internal collaboration, that you're very aligned with your product team and what they're building, what they've built for other markets. Again, with us being a global business unit, there's been stuff that's being built for certain markets that won't work for others, and certain learnings with certain product that's being built for certain markets that actually can be rolled into the UK as to where we might hit bumps in the road possibly as well.
Okay, so how did you go about prioritizing then partners specifically?
The crossover has certainly helped us, I guess, in that sense. So Australia, we were fortunate that we had a couple of partners that were looking to come to the UK anyway, so we obviously aligned with those partners. So keep your eyes peeled. We've got some PR coming out with some exciting
and some case studies, I would hope.
Yeah, exactly. And the fortunate thing we have there is the really strong relationships, but also the trust in our product and the knowledge that product, it really services those platforms well. And like you say, the case studies that come from that obviously help to drive new conversations, because we can leverage case studies for other parts of the business. But devil's advocate on that, you really do want in region and in country case studies that are going to resonate with your target addressable market, because brand power is obviously really important. So we've got some good brands coming on board, some great brands coming on board with us, and we're really excited to get those case studies out there. There's some of our early adopters in the UK part of Worldpay for platforms, and that kind of noise, if you like, and there's real world examples, really do help to drive further engagement. I've found that wherever I've been, if you can talk about customer success, but also then seeing those partners stand up in Australia, if we get the UK division to that point, these people that actually do real world case studies for you. And if someone wants to pick up the phone and ask about their experience with Worldpay for platforms, every confidence that those partners would do that for us as well.
Yeah, brilliant. Okay, so it sounds like having trust in the product and knowing what you're building together or what you're setting out to achieve together, being able to actually deliver and having some successes together that you can then utilize for advocacy and building out the narrative and building trust in the partnership. These sounds like some sort of the recipes for success. What about in terms of any red flags? If we think about sort of people, again, thinking to expand through partnerships and integration, is there any sort of point where you think this is a red flag that maybe this partnership or maybe this integration isn't going to take you where you want to go?
We're in a strange time in payments where there's a lot of, not even platforms really, and merchants as well, but there's a lot of operators that have more than one payment provider. So you're now competing more than you ever have been, not just to win a customer or partner, but for share of wallet potentially. There's always an innate risk that you're promised X amount of share of wallet, and actually the reality is that comes slower than you expect. But then it's on us as a payments provider, using the data and reporting capabilities we have and leading into the product that we've got to show why we've earned the right to expand or grow that market share. We've talked about Europe. There's a strong possibility that a partner of ours might use us in the UK and Canada and the US, Australia, New Zealand, but they might not be using us in Europe. So there's another tech payment provider possibly in that stack. And you can, like I said, you can be promised X and you get delivered Y, but you want to find out why that's happening if you do get to that quickly as you possibly can, because there's every chance it's just linked to roadmap challenges within your platform partners. It could be linked to a product launch that hasn't happened, or their own geo-expansion where they were planning on using Worldpay rather than the other payment provider. So really getting to the bottom of those things quickly. And that's why QBRs and regular touch points with partners are so important. And that's why we lean into the partner success function like we do, because I've seen it time and time again where you have partner managers who are reactive rather than proactive, and you have to
Mm-hmm.
stay so close to your partners to understand pain points they're having, not just with payments, in their industry, against their own competition in market, look at their financial performance. You can go on a partner's company's house like accounts and see if they've had a good year or not. Do your research. Like the best partner managers have had really know their partners inside out, but they also really know their partner's industry inside out.
Mm.
Scratches us down as far as the language that's used. One of the best partner managers I had working for me previously, like, just threw himself completely into financial services as a sector, to the point where, you know, if he was on a panel and didn't mention payments, you'd struggle to guess who the payments person was on that panel. You just think it was a bunch of people that work for lenders in the financial services sector. That level, I don't say everyone's going to get to that level, but it goes so far in relationship building. It really does.
Absolutely. And I love what you mentioned around being proactive to challenge the why. So if a partnership isn't producing the results that you had expected it to, not being reactive to that, but actually wanting to dig deeper into why is that happening, and seeing if you can find a way to get it to where you need it to be.
It's stakeholder management, it's relationship scoring as well. There's lots of stuff that you can do with it to see the red flags early if a partnership is struggling, or if a partnership's struggling to ever go where it was promised to go early days. Like the big thing is why, like finding out the why sooner rather than later and trying to get ahead of it. And there have been occasions with partnerships where it just hasn't worked out, various companies that I've been at, but easier to walk away than try and keep flogging that horse as well sometimes with those partnerships, because they still can take up your time and consume your time, and you don't want that for something that maybe is never going to go anywhere as well. So being able to make the hard decisions as well is also important.
Yeah, to avoid the sort of sunken costs trap and know when to cut your losses.
100%.
Yeah, absolutely. And I think that goes back also a little bit to what we discussed earlier about the sort of the cross-functional nature of a successful international expansion, where you need business development partnerships involved in that whole process, because so much of the delivery and the execution is going to be about the relationships that they are forming locally in markets as well down the line, regardless of how perfect your product market fit is, or how well you've priced it, or how great your marketing is as well. All right, just then moving on to the last section, and then we'll get on to the Q&A. And I can see a couple of questions have come in already. So for anyone who wants to add a question, feel free. Now's your chance. But one from me first. And actually, you discussed this a little bit earlier about kind of boots on the ground and having a local presence when expanding internationally. And you've talked a little bit about how this has worked for Worldpay for platforms already, but what do you see as being the great advantage of that for companies when they're expanding internationally, or where might they not need to invest in having that local presence?
I think for myself with this, with Worldpay for Platforms UK, my team has only really come into sort of being fully onboarded in the last month or two. But the difference of having those individuals in situ, not, it comes back to that internal relationship piece again. Like, people are starting to learn to come to me to ask about platforms, to ask about what we're doing in the market, what sort of customers they should be considering for Worldpay for platforms, which is great. But the more bodies you have, the more relationship building that happens, and the more you open up internal collaboration as well. So we've seen a lot of success with that over the last couple of months. There is an element of existing relationships. You don't hire people for relationships, but obviously people do have, quite often, that have been in industry for a certain amount of time, those existing relationships where they can open doors. And if you don't have that presence actually in market, then you're going to miss out on some of that organic pipeline that would come from network as well. You need a mix of that, because you have people in your team that maybe haven't come from payments and they don't know who those payment stakeholders are within an organization. But yeah, that's why putting a well-balanced team together is important in that sense. But we obviously are in English-speaking countries primarily, with the US, Canada, Australia, New Zealand, and the UK. And I think from a legal regulatory framework point of view, again, there's quite a lot of crossover with those countries that we're in. So that has aided us from an expansion point of view, without doubt. I think when we get into the European market side of things, there'll obviously be different challenges around languages and payment methods, certainly. But you could say there's been an element of strategy around that, because it's easier to enter a new market where payment methods are fairly similar, people speak the same language, and the legal point of view, there's been less uplift. But we've also done it phenomenally fast from a starting point to a launch point with both the new markets that we've geo-expanded into, which is testament to our product teams and our legal teams and our marketing teams and everyone that's pulled together to really make this a possibility over the last few months. So yeah, we're pretty proud of the collaboration that we do as a business, and that's not just sales teams collaborating with sales teams or other partner teams. It really is a crossover across all the different departments within the organization.
Yeah, absolutely. And then thinking about those expanding internationally that may not have this sort of the scalability or the resources of Worldpay for platforms, what would you advise would be the sort of the first area that they should be investing in to get them started?
You'd probably have to partner a little bit. That's the build versus buy thing. We're fortunate that, yes, we can probably build at scale quicker than some small operators out there. But even Worldpay has strategic partnerships where we've decided to buy rather than build. I think that's becoming more common these days. You choose your battles sometimes. You choose the quick route, and I think some newer entrants maybe would have to have more of those buy type strategic partnerships. Yes, there's a cost that comes with that, but there also can be a cost saving because the high, really expensive cost point of building it completely from scratch is taken away, and you might have monthly SaaS fees that will accrue over time. But actually, I've seen some really clever, nimble businesses that have just plugged and played 4 or 5 other people's products and then wrapped it up and called it their own thing. And then maybe over time they get to a point of scale where they start to build 1 or 2 or 3 of those elements themselves. But there's so much good product out there these days. Again, this isn't just in payments, it's in pretty much every sector where you can rely heavily on third parties and build a business off the back of it. So we're in fortunate times in that sense. And then just it's good individuals, right? It's the right people to help you launch that geo expansion. I've maybe taken a bit longer in building out my team here very deliberately because I really wanted the right people in my team that are going to help us to scale and build this business unit out here in the long term. And I'm really proud of the team that we put together, and this is just the start, right? And I think those good people around you will help you to build for success. And we're quite a small team within Worldpay in the UK, right, as well. I get the whole, we're a giant operator in the scaler point of view, but we're actually quite a small, nimble team, and we operate with a bit of a startup hat on as a unit. And some of us have worked in startups, which probably helps to bring a little bit of that mindset to the table of how do we get creative about some of these things. But yeah, for smaller operators, those people with the big ideas and the understandings of how they can pull bits of products in from elsewhere, I think that is really important.
Brilliant. Okay, I'm going to move through to the Q&A now. Funnily enough, we've got one question here, which I guess on the flip side of the sort of small startup environment, I've got a question here about, do you have any advice on how to align internal teams across larger organizations behind the expansion strategy? So I guess in terms of where maybe there isn't that commitment that you talked about earlier on, any tips or tricks of actually galvanizing internal teams and getting everybody on the same page?
I think a lot of calls, to be completely honest. We spent a lot of time. Yeah, and don't be afraid to delay, right? If something isn't quite right and you need to have a slight delay, you can have internal pressures around go to market and launch dates and things like that. But it's not going to aid your customers or your partners in the long term if you do pull the trigger too quickly. We had a lot of internal calls, and that's with all of these teams here. Our head of products in Australia, we have marketing teams in Australia and the US. There's a real global sort of set up to the Worldpay for Platforms business unit. We're operating in 3 different time zones, but we still collaborate really well. And that's because you can do stuff like shorten your phone calls down to 30 minutes, right? So yes, I might be on the phone to Australia, but do I need to be on the phone for 2 hours, or do I run a really concise 30-minute meeting where I know exactly what I want to get from this? But that communication has to be a constant channel. We're live in market now, but we're still regularly engaged with Australia and the US teams that have helped us to get to this point. And that's that ongoing learnings piece. It's that collaboration across partners that operate in all of those different regions. So we've got a few projects ongoing at the moment, which aren't even phase 1, they're phase 2, where we've had some UK customers that needed processing in Australia or the US, right? So we've flipped it on its head a little bit. And that is one of the real powers of the different regions that we do operate in, that we can serve customers, across various different markets. But yeah, that collaboration, get your product team on your sales meetings as well. Don't just have a meeting with products to talk about product. Get them to join your meetings where you're talking about pipeline and the front side conversations that you're having from a commercial point of view. That's always been a big one for me. It doesn't have to be a kind of divided line between sales and products. And I think products actually comes to work better with sales teams when they do understand and they do know right at the very beginning what might be coming up in a few months as a product need or ask from a platform that we're talking to their end merchants even.
Yeah, absolutely. And I think from my perspective, having worked on these expansion projects and working in the market research side, so before the execution and actually getting to understand these markets and the customers, the competitors, like we discussed, as I said, I think for me, it's very powerful when all different parts of the business are involved in discovering these new markets together almost from scratch sometimes. If you're going into a market that maybe as a team you don't know much about, say where we've helped North American payment companies come into Europe, and Europe's a bit of a sort of blanket mishmash of different markets. I think where they've had product, sales, marketing, the CRO, the COO, all really discovering this new territory together right from the beginning and building up that narrative internally about why do we want to go there? What does this look like? How are we going to deliver? And bringing them on board in that journey earlier rather than just when they're expected to execute it. I think from my perspective, that's when I've seen the best teams actually then be able to execute on it afterwards, after they launch.
I think marketing's a massive one as well. Like the commercial team should never just expect marketing to go and just build stuff for them. Like they have to be telling the marketing team, this is what we're seeing in the market. Oh, I really like the way this provider positioned this particular product, and product marketing in its own right has become, a thing where you have product marketing managers, and that's an important role, I think, in most industries now. But constant engagement, and again, like exposure for marketing people to customer meetings, to going out to events. Shane, who works with me, comes to a lot of events with me, and he sees how our competitors are positioning their product, how people are talking at events, sort of panels people are going on. All that sort of exposure is really invaluable from a marketing and commercial collaboration point of view. You could argue that over the years in business, again, just as a general sort of statement, products and sales teams have clashed, marketing and sales teams have clashed. Like they have to work together so closely in order for you to bring your product kicking and screaming sometimes, but bring it further along and make it best in class. All of those teams have to be singing in harmony, not competing with each other or falling out. Yeah, we do that really well as a business unit here to make sure we are all aligned on what we're looking to build. And really important from a geo-expansion point of view that you're getting your messaging right from day one. And that does mean the alignment with both of those teams. Compliance, I was on that question as well, compliance and legal again. Yeah, we've been fortunate that we've been able to lean on some really experienced people in that area. But fortunately, Worldpay is obviously also an active acquirer in the UK. So this isn't our first rodeo from a payments point of view. And there's a lot of legal framework stuff that we were able to utilize and have support from in that sense as well. But we still obviously had to collaborate with those teams.
Yeah, brilliant. Love it. All about collaboration. And for the final question, then, just looking at the Q&A here, I think this goes back to what we were discussing earlier about being brave enough to cut your losses if a partnership isn't working out in the way that you would have hoped. Are there any key metrics that you use to judge whether a partnership is delivering the expected value or not? So we talked about maybe some of the softer indications and how to tackle them, but do you use any sort of, is there any hard metrics at play, or is it an art or a science in that respect?
I think with payments, I've been in payments for 15 odd years, and one of the constant trends I've seen is people not pushing the question hard enough around what the partner's forecast actually looks like. We have it with platform partners and non-platform partners, other parts of the business as well, but partners pushing for very aggressive commercial terms around payments these days, but not willing to potentially share a forecast for their own growth. I don't understand that really, because we talk about all the planning and research we do and TAM lists and stuff like that. These are businesses that are going to be doing the same things in their own verticals.
You would hope.
We would hope, yeah. But ask the difficult question around, yes, it might be an element of ambiguity and finger in the air to it, but you must have an idea, if you're looking to embed payments particularly, what good looks like for you in year 1, year 2, year 3 on that. You need to be able to do appropriate forecasting up front before you provide commercials, and you can get clever around that in terms of tiered pricing and tiered revenue shares, so that you're not leaving yourself exposed by giving away huge margins up front. And that's something that's definitely become more prevalent in the market. Obviously alluded to making the hard decisions as well, but the judging of it will obviously stem to revenue still, because partnerships is not just that shiny PR announcement, or it should never be. And that's what maybe it has been over the years within certain organizations, and then it's not taken seriously from a contribution point of view. We don't have the ability for that to be the case here. We don't engage with end merchants on the street. Our whole business model is partnerships ultimately. So we do need to know from day one that these partnerships are going to be a success, and we need to stay engaged with these partners. And the regularity of meetings and calls and those connection points and doing partner events make these partners really feel like they are an extension of your organization and you're an extension of theirs is the big one. I was listening to a podcast a few months ago, and I think it was Louise Hill from Go Henry was talking about the payment providers that her business works with, and she was very much saying that they're not vendors anymore. They really are partners within their organization. And it was an interesting way of looking at it, because I think payments companies have quite often in the past just be seen as vendors, and we need payments, so we need a payments company. Actually, it can be so much more than that, particularly if payments is fundamental to what you do as a business. And I would much rather our partners were talking about us as a partner rather than a vendor or a supplier.
Absolutely. So having that trust, the relationships, and having a really clear, well-established purpose of an idea of what success looks like together as well to work towards. Brilliant. Thank you so much. Unfortunately, I think we're almost out of time, Grant, but this has been a really fascinating conversation. Thank you so much for giving us all your time today and sharing your perspective. And then for anybody who's either watching this live or who's watching this on demand, do feel free to reach out and continue the conversation. I'm sure that both Grant and myself would be very happy to connect with you and talk all things payments and international expansion. Brilliant. Thanks again, and wishing everybody a very lovely day.
Thank you.
Thank you.